Greetings, folks. If you have been investing in stock market and have experienced drawdowns and losses in last few weeks and months, you're not alone. If you haven't, give yourself a pat on the back. I am in the first category, having made losses for 3 consecutive weeks and also an overall 12% drawdown from the highs achieved on the 4th of October 2025. Losses and drawdowns can be emotionally extremely challenging and they can scramble our mind, which leads to making wrong decisions. In this video, I'm going to talk about how I'm coping with this situation and will suggest some of the do's and don'ts that I apply to my trading, which might be helpful for you as well. But before we do that, a quick word of statutory disclaimer. The information being shared in this video is for educational and informational purposes only. It should not be construed as an investment advice. Individuals are encouraged to do their own research and assume full responsibility of any actions taken based on the suggestions provided. Let me first share with you the losses that I have experienced in the recent weeks. As you can see on your screen, in the top box, I have had 3 consecutive weeks of losses. The week ending 24th of Jan, a loss of 0.24%. Week ending 31st Jan, a loss of 7.51%. Week ending 7th of February, a subsequent loss of 3.94%. The way I calculate the loss or gain is on the basis of the balance held in the account at the end of previous week. Looking at slightly longer term, in the second box, I have presented to you the peak achieved on 4th of October and the latest gain as of 7th of February 26. Now, the percentages in this box are from the base capital that I deployed a couple of years ago. So the difference between the peak on the 4th of October at 112.68% and 7th of February, which is 86.42%, seemed like a big drop. However, when computed from the top, the drop is only 12%. So a drop of nearly 12% from the peak achieved on 4th of October and last 3 weeks of consecutive losses, it does play on my mind. So what do I do in such a situation? The first action I take is to zoom out and look at the bigger picture. When I look at the bigger picture and look at my portfolio performance chart over a longer period of time, I can see that it is still going forward. Have I had drawdowns? Yes, there have been multiple phases of drawdowns. One of the biggest one was in early April 2025. The current movement, which looks quite steep drop in the short term, looks like a sideways consolidation when I look at it in a holistic view. So by looking at the bigger picture and longer term, it calms me down and makes me look at things more objectively. What is also comforting to note from this picture is the narrow range of weekly gains and losses. In the past few weeks, my biggest loss was 7.5% or something like that. That is within this range. If that was an outlier, then that would be a cause of concern. A tight range basically tells me that my risk management process is still good. If I get an outlier in any week, then I need to review my risk management process. So, in terms of very first suggestions that I will make, is if you are not tracking your portfolio regularly on a week to week basis, please start doing so, because if you can't see a broad picture, then how will you manage? How will you make adjustments? Whether you maintain your portfolio on an Excel sheet or use tools like Yahoo Finance or any other tools, you should be able to see a long term picture of how your portfolio is moving as the time progresses. Next, let me share with you some of the other things that I have been doing during this time. I'm taking a very close look at the entire portfolio, all the holdings I have, and trying to identify the stocks which are dropping more than others in relative terms. Stocks which are falling more than others, they give me an indication that something might be wrong with those stocks fundamentally. That leads me to carry out a further level of research and review of those stocks. The idea behind this review is to use this opportunity to weed out fundamentally weaker stocks. The other side of the coin is equally important, which is to hold on to your conviction stocks which are fundamentally strong. It is very easy to lose faith in some of the stocks you have because of the recent drop, but you have to go back to the basics, do your research, understand about their underlying business, how they've been doing, what's the management like, what their plans are, how they're executing their plans and strategy, and whether the business is generating revenues and profits as they have planned. Last but not the least, you need to review your entire execution process. How do you choose a stock to invest in? What process do you follow? Number two, how do you decide when to buy or add into a stock, or when to trim or completely get out? How do you manage your risk, whether it is through position sizing, stop losses, controlling a single stock exposure, or controlling your individual trade size, or a combination of these? Review that thoroughly and make sure that it aligns with your account size and risk taking capability. Next, take a look at things that we should avoid. First and foremost, we should not sell in panic, because when mind is scrambled, you might end up selling some really good stocks, which will potentially rebound after the sell off is done, and you will regret that. Remember, in this business, doing nothing is a very good option. It's a good idea to take a break. Don't watch your account, don't watch charts, just step away, go for a walk, go for a run, and let your mind settle down. The other thing which you should avoid doing in such times is randomly averaging down. If you do that because fundamentally you believe in the stock and it is the right area to add, it is matching with your execution method, then by all means do it. But don't do it randomly just because you see it has gone down by a certain percentage point and you see a better value in it. Last, always keep some cash in hand in good days and in bad days. When the prices are going up, when everything is looking rosy, we tend to deploy all of our cash and we are not left with anything to take advantage of these falling prices. Even when the things start falling, you shouldn't deploy all of your cash in one go. The term I use is drip feeding. Always leave small chunk for even better opportunities. Hope you found this useful. Please like and subscribe, and also share with other people who might benefit from this. Thank you. Namaskar.